A very good evening to all of you. It's a pleasure to be again talking to you all on one of the issues which is plaguing the entire GST compliances and something wherein there had been a bit of a controversy and recently there is a decision from the Supreme Court. So we felt that it might be a good opportunity to take it in a period which is just immediately preceding the budget, because once the budget is presented this Sunday, thereafter all of us will get busy at analyzing the fine print of the budget, and depending on the content we might announce a quick webinar on the budget provisions as well, depending on the content which is available in the budget. But since we had not done a session in the month of December due to the audit timelines, we felt that we should have something which is quick and simplistic, but at the same time having far-reaching implications from day-to-day perspective. And therefore, we have today's session wherein we are going to talk specifically about implications for our 360-degree analysis from a property renting perspective. And immobile properties, as we all know, is neither goods nor services as generally understood. But the way the GST law is being interpreted, there have been certain controversies surrounding it. The fact that an immobile property is outside the purview of GST also brings in certain challenges in input tax credits. And more importantly, the exemption which is granted for residential renting had seen its own fair share of controversy. So these are the three broad dimensions, and we'll try to understand from various transaction models the different perspectives about how this entire concept of immobile property renting spans out vis-a-vis the GST provisions. So with that, let us start with the broad agenda which is already set out in the webinar notice which has been shared with you. We're talking about the exemptions, including the changes, periodic changes which came up in the residential renting, typically involving the RCM applicability as well. Immobile property basket, as we are all aware, the place of supply is the location of the immobile property itself. This has implications both in terms of registrations and claim of input tax credits. So we'll try to understand that and try to see the controversies surrounding that. We'll also touch base a little bit about the valuation and a circular issued by the CBC on that regard. Thereafter, we'll move into a slightly different discussion on where what exactly constitutes renting vis-a-vis something which are similar services, something like an accommodation or a hotel or a hostel accommodation service, and something which is much wider in terms of business support services. So where do you draw that line of differentiation? Because the tax rates as well as the ITC and the POS rules are very different for each of them. Then we come to a situation of multi-locational tenants, wherein there will be either an ISD or a cross-charge requirement. We'll understand the interplay between the two. And thereafter, we'll look at it from a landlord's perspective, and we'll talk about the safari retreats and the retrospective amendment. Of course, that has been discussed earlier, and therefore we'll be very brief on that. But yes, for the purposes of comprehensiveness, we'll touch upon that. And finally, we'll talk about the controversies surrounding capital account transactions, especially when a person is owning a protective tenanted premises and he is surrendering the tenancy rights or transferring the tenancy rights. Similarly, in commercial parlance, you have various industrial development corporations which provide land on a long-term lease, and thereafter there's an assignment of this long-term lease. So what would be the GST implications of that, whether it could be considered as an immobile property or whether there is a service element involved requiring the seller to pay a GST. So, and that has been a controversy. A couple of High Court rulings recently have tried to set the issue at rest, but the department is not accepting the proposition, resulting in show cause notices. So we'll touch upon that aspect, and finally we'll summarize the entire discussion. Maybe around 45 minutes of time is what we should be targeting for today. That takes me to the first and the fundamental discussion, which is the split between commercial renting and residential renting. As we are all aware, residential renting has always been intended to be outside the purview of indirect taxes. Earlier, service tax also was very specific that it taxed, there was a tax only in case of commercial renting. Same concept has been continued into GST, and therefore, when GST was introduced, we were told that through an exemption entry, services by way of renting of residential dwelling for use as residence was exempted. And therefore, essentially, commercial rents were liable for GST, with necessarily the credits being available on that account. The controversy here started brewing up in cases where the property by itself is in the nature of a residential dwelling. It is being used for residence, but it is not used by an individual for residence. There is an intermediary entity. Typically, a hostel operator was a classic example which was creating the controversy. So, a hostel would take up a residential building on rent from some third party and then provide it as a hostel services to various students, maybe a paying guest or a hostel services to various students. Now, in this type of a situation, the department used to issue show cause notices to these hostel operators and to the landlords, more importantly, saying that look, the exemption is only if the service is by way of renting for use as residence. The hostel operator, who is the tenant here, is not using the property as a residence for himself. He is using it so that it could be further let out by way of a hostel services or by way of a PG accommodation service to various students. And therefore, there was a sort of a strict interpretation of the exemption notification which was canvassed, resulting in a denial of exemption and a demand of tax liability. Matters were taken to the courts, and the Tagar Vasudeva Ambrish, first it appeared in the Karnataka High Court, and in the Karnataka High Court held the decision in favor of the taxpayer, saying that the entry doesn't say that it has to be given only to the tenant who is going to use it himself as a residence. The interpretation of this entry was to say that there has to be a renting of a residential dwelling based on the municipal records and the purpose of construction. It was possible to demonstrate that the building was actually a residential building. And finally, end of the day, there were students who were staying there, or the paying guests who were staying there. Therefore, it was actually used as a residence. And therefore, the Karnataka High Court said that yes, this is something which is eligible for the exemption, and the show cause notice was incorrect. So that was, of course, the decision of the Karnataka High Court. And in the meantime, the government got conscious to this issue, and therefore, in 2022, basis the Karnataka High Court decision and the controversy which was surrounding this entire issue, the exemption was partially withdrawn. The entry now said services by way of renting of residential dwelling for use as residence, except when it is rented to a residential registered person. And to add salt to the wound, the entry also provided for an RCM, reverse charge mechanism, that if a residential property was given to a registered person for renting purposes, then the RCM would apply and the registered person would be required to pay the tax. So therefore, post 18th July 2022, the residential renting has two parts to it. If it is a renting to an unregistered person, then it is exempted. Make no mistake, the supplier could be registered, the supplier could be unregistered, it does not matter. So long as the recipient is unregistered person, the exemption continues. But if the recipient is registered, the exemption is withdrawn and reverse charge mechanism gets triggered and the recipient ends up paying the tax. All in all, as far as residential properties are concerned, from a landlord's perspective, he is safe. He doesn't have to pay any tax. If the customer, tenant, is unregistered, clearly exemption applies. If the customer or the tenant is registered, then RCM applies instead of forward charge. So, residential renting, that is how the entire situation was being looked at. Of course, this amendment also meant that the department wanted to treat this amendment as the de facto position prior to 2022 also. The Karnataka High Court verdict was challenged in the Supreme Court, and recently the Supreme Court gave a final verdict on this issue. It took cognizance of the amendment made effective from 18 July 2022 and held that yes, the Karnataka High Court has correctly ruled prior to 18 July 2022 the words used in the exemption entry were very specific, and we cannot add additional words into those entry and try to restrict the exemption only in case of end users and not in case of intermediary transactions. So prior to 18 July 2022, whatever controversies were there would get settled because of this issue, and post 18 July, because of the amendment, I think the matter is now reasonably clear as far as the residential renting aspect is concerned. As far as commercial renting is concerned, it has always been taxable at 18%, and naturally the tax is generally levied at forward charge mechanism. Of course, if there's a government supplier renting a property to a business entity, then there is a reverse charge mechanism which has always been applicable, like in many other government services, that is also applicable. Interestingly, thereafter, there has been a introduction of a reverse charge mechanism even for commercial property. But make no mistake, in case of commercial property, the reverse charge mechanism will come into place only if the supply, if the landlord is registered and the customer is registered, tenant is registered, it will be forward charge only. Only if the landlord is unregistered and the tenant is registered, in that case, reverse charge mechanism triggers in from October 2024, which is a later date. So this is where I think the difference between residential and commercial renting comes into account, and one will have to be very careful, especially as far as the companies are concerned, when they have a rental expenditure. They should be careful about classifying that rental expenditure either into residential and commercial, because the entire RCM and the taxability will depend on whether it is residential renting or commercial renting. That takes us to this entire issue of RCM versus forward charge. As I was highlighting in the earlier slide, generally the forward charge mechanism will apply for commercial renting. As far as residential renting is concerned, there is entry 5AA, which says that renting by a registered or an unregistered person to a registered person will be under the reverse charge mechanism. And entry 5AB, which was introduced with effect from 10th of October 2024, says that if there is any non-residential property which is rented by an unregistered person, mark these words well. Here the words used are by an unregistered person to a registered person. In that situation, there will be a reverse charge mechanism applicable. Now, why is this important, the difference between forward and reverse charge mechanism? It's primarily from two perspectives. The time of supply. If it's a forward charge mechanism, then the time of supply, we are aware, is the earlier of the invoice date or the receipt of payment advance, whichever is earlier, will be the time of supply. But as far as reverse charge mechanism is concerned, we are aware that in case of reverse charge mechanism, there is a self-invoicing requirement. And there are rules which prescribe the timelines within which the self-invoice has to be generated. And the time of supply will be the date of the self-invoice or the date of payment, whichever is earlier. So in that sense, the basic disconnect will be between the invoice versus the self-invoice. And similarly, the procedures for input tax credit will also change accordingly, because in the case of forward charge mechanism, input tax credit will be basis the invoice appearing in your GSTR 2B and the matching and the entire conditions attached to it. Whereas in case of reverse charge mechanism, the input tax credit will be basis the self invoice. Of course, it will not require matching under GSTR 2B, etc. But the requirement of the self invoice would still be a trigger point for the claim of the input tax credit in case of reverse charge mechanism. So having understood this aspect of forward versus reverse charge mechanism, we come to a very tricky aspect which comes up in case of immovable properties, and that is the requirement under sections 12 and 13, which defines the place of supply of renting of immovable properties to be the location of the immovable property itself. Make no mistake, in case of many other services, you just end up with the GSTN of the customer and accordingly decide the place of supply. And we are aware that the place of supply and location of supply, or the combination of the location and the place of supply, determines the tax code, either the C plus S GST or the IGST. Now, here, while there is enough clarity on the place of supply to say that the place of supply will be only the location of the immobile property, there is not enough clarity on whether the location of the supplier, which is the other side of the entire decision matrix, is also, in case of property related transactions, to be considered as the location of the property, or it could be the contractual location. Let's take a very simplistic example. I am sitting in Mumbai, I own a property in Delhi, and I rent the property in Delhi to somebody in Delhi. The question which comes up is, the place of supply is Delhi. There's no problem on that. But is my location to be considered as Mumbai, or is my location also to be considered as Delhi, requiring me to register in Delhi and charge C plus S GST? Or can I say that, look, my office is in Mumbai, so, and I'm already registered in Mumbai, so I will continue this registration and I will charge IGST, treating the location of supplier as Mumbai and the place of supply as Delhi. In my view, it would be possible to argue that the location is the place from where the contract is made, or the head office or the seat is located, especially in a situation where there is an exclusive renting of a property. Situations may change in a variation where you are a business support service provider like a WeWork or something like that, wherein you are providing a shared service. Because for providing that shared services, necessarily you will require support staff, etc., which would be at the Delhi location, and that might trigger a requirement of registration at the Delhi location. But if it is a simpliciter renting of an immobile property, wherein as a landlord I'm just giving the keys and executing a contract, in that situation one may be able to argue that the location of supplier should not be forced to be Delhi. It can be existing registration in Mumbai or the head office in Mumbai. So I think that is the larger issue from the supplier's perspective. Now, from the recipient's perspective, we have another challenge, and that is the challenge of the POS mismatch. And in this example, we took a case where the customer was from Delhi and the POS is Delhi, therefore he will immediately claim the credit, there is no issue. But assuming that the customer itself is setting up a unit, a small office just for a liaison purposes, and he is otherwise not registered in Delhi, in that situation, there will be a POS mismatch because he might still give the GST number of Maharashtra, but the POS would be Delhi. Therefore, because of the POS mismatch, he will not be eligible to claim the credit. And that is the reason the solution is that the person will have to obtain a registration. Of course, in certain cases, if there are certain services provided from that liaison office or the branch office, that would anyways trigger a independent registration requirement. But even for claiming and monetizing this credit, there will have to be a need for a registration in the state B, so that there can be a cross charge which can be issued, cross charge invoice which can be issued to the head office to claim the credit and transfer the taxes or the credits to the original state of Maharashtra. So I think this is something which one needs to bear in mind. Coming to the ITC eligibility, we are all aware of the generic conditions for claim of ITC and the challenges which we have faced on that account. Commercial renting is not immune from those challenges, and therefore all of that would have to be established. As far as residential credit is concerned, ITC on residential renting, in that situation, we need to bear in mind that if the service is not used for the course or furtherance of business, and if it is in the nature of an employee perquisite, the credit will get blocked. So typically, if you have a situation of a staff who is staying in a rented premises, there can be an argument. Of course, it's debatable, but there can be an argument to say that the renting is for the personal consumption and therefore and not in the course or furtherance of business, and therefore not eligible for credit. The question comes up in cases where the residential unit is not in the nature of an exclusive employee staff quarter and not a part of the CTC or a part of the perquisites, but is a part which involves a temporary stay of either an employee or of some guests or officers or contractors and auditors and things like that. Typically, as you know, you are aware, in especially in many companies which are multi-locational, there is a guest house which the company would own or take on rent, and they would act more like hotel accommodation, wherein people would come for a few days. Whoever is the guest of the company can come and stay there, or if an employee is traveling for business purposes, he'll stay there. In my view, these types of guest houses, even though they might be classified as residential dwellings, would still be eligible for credit, because end of the day, those guest houses are used for the purposes of business and for the furtherance of business, and therefore all the tests are satisfied. They do not become a part of an employee CTC or a perquisite, and therefore that should not create a problem. Of course, for those guest houses, if there are food related expenses, we are aware there's a separate entry which denies the input tax credit for food related expenses. So that necessarily will not be available in that type of a situation. That takes me to the concept of valuation, and of course the rental is the base rental always becomes the value on which the GST is to be paid. We need to bear in mind the provisions of section 15, which says that the value shall include any taxes, duties and incidental expenses and any other amount which is charged. So typically every amount which is recovered from the tenant becomes taxable, subject to the pure agent test which has been laid down under Rule 33. And we are aware that the pure agent test has four broad conditions. There has to be a contractual authorization by the tenant to the landlord to make the payment. The amount has to be recovered at actuals. The landlord should not hold the title to goods or services, and the amount should be shown separately in the invoices. Typical situations are that there is an electricity recovery and there is a water recovery, which typically a landlord does from a tenant. Now, make no mistake, as far as the water recovery is concerned, these are not typically the water charges which are identified against an individual tenant. And therefore, to argue that what I am recovering is only actuals may be difficult. In case of electricity, if there's a separate meter identified, one may be able to say that this electricity is identified against an individual tenant and therefore excluded. In most of the situations, it may make sense for the tenant to himself directly make the payment rather than route it through the landlord. In most of these examples, if you are not able to demonstrate the actual usage in terms of the precision of the consumption and the value charged, it may make sense to include it in the value and charge GST at 18%, treating electricity as incidental to the renting of the property. And essentially, this is a situation where there is a credit available to the tenant, and therefore it does not really make sense litigating this issue. Though I am aware that there is a circular which is a little bit cryptic on this front, but it's better to avoid litigation on this front. This takes me to the next facet of discussion, which is relating to the different flavors within which this property renting types of transactions can come in. And one simplistic and the generic classification, of course, is renting of immobile property, which typically, in my view, would require an exclusive grant of a right to use or occupy a space, maybe for a defined period. It is more in the nature of a passive service. Typically, in these types of transactions, there is no additional value added service provided by the landlord, and it is for a not a very short period. It is for a reasonably mid-term period. So it can be for a few months or years. But if it is only for 10 days or 15 days, or maybe something like a hotel, that would not fit within this. That goes in the second basket of discussion, which is the accommodation services. And that becomes very important because in an accommodation services, there is a short-term stay along with various amenities, including the electricity, the maintenance of the premises, and many other factors. And this becomes relevant because recently there has been a rate change in GST 2.0 since September. If the value per day is less than or equal to 7,500, there is a 5% without any input tax credit rate. Whereas if the value is above 7,500, it continues to be 18. So because of this rate arbitrage or a difference, this becomes very important to practically understand the difference between renting of an immobile property versus an accommodation services, which may include hotels, guest houses, hostels, etc. As compared to these two, we have a third situation wherein there are various support services or facility services, wherein along with the renting of the property, there is a lot of additional services which are provided in the nature of common area maintenance, security, the general office maintenance, maybe housekeeping at times, providing for some support staff, and handling the day-to-day repairs, etc. Now, when you club the renting along with all these services put together, and more importantly, if it is not an exclusive type of an arrangement, one may be able to say that this is really not in the nature of renting, but it shifts itself into what is known as a business support service. And naturally, once the SAC changes, of course, the rate of tax is the same. But the advantage which comes here is in support services, the place of supply will no longer be determined by the immobile property itself. It will be determined in general. So therefore, you may be able to use the recipient based basket. Now, friends, this is very important to understand between renting and support services. And especially if you are in a situation of the same entity and your branch office paying rent and then cross charging to the head office. If we are going to just say that it was a rent which is cross charged, then again the branch office will also have to apply the place of supply of the branch itself, thereby not enabling the credit to the head office. But if we are able to bundle that renting involved and say that this is more in the nature of a generic business support service, then you may be able to cross charge with a recipient basket and therefore pass on the credit to the head office. So in that sense, this distinction between renting accommodation and support service becomes very, very relevant. And that brings us to the cross charge. And as we are aware, in the last year, ISD has also been made mandatory. And therefore, there's always a question that if my branch is incurring a rental expense and there are no revenues at the branch, how do I bring it back to the head office? Do I use ISD registration or do I do a cross charge? In my view, as far as renting is concerned, the ISD is ruled out because the service is consumed at that branch itself and does not flow to the head office. If at all it flows as a benefit, as a part of a larger bundle. And therefore, ideally, as we discussed in the earlier slide, we should bundle the renting along with various other services provided by the branch for the benefit of the head office, and then treat it as a business support service and have it as an outward supply being taxed by the branch to the head office. Of course, if the client is eligible, if the head office is eligible for full input tax credit, then the value as declared in the invoice will be acceptable. Otherwise, one can go for cost plus 10% to decide the valuation mechanism for that. Now that takes me to the landlord's perspective, and that is where we have an interesting provision under section 17(5)(c) and D. And the question which came up before the Supreme Court in Safari retreats was in the context of 17(5)(d). As I said towards the initial part of my discussion, I'm not going to spend too much time on this. We already have a couple of detailed webinars on Safari retreats and its aftermath. But for the sake of completeness, we are considering it here. As we are aware, the situation there was the interpretation of section 17(5)(d), which said that if you are if a person is procuring itemized goods or services and he is using it for construction of an immobile property, then credits are blocked, except when the immobile property is resulting in a plant and machinery, or earlier, of course, the word was or, which has been later on replaced by and, or the services are not on own account. The construction is not on his own account. And Safari retreats in the Supreme Court at that point of time said two things. It was a case of a landlord who had rented the premises to the mall, various tenants in a mall. And for the said purposes, it had constructed the mall using various goods and services. And he had claimed the credit against the GST payable on the renting income. And the Supreme Court allowed the credit on two broad grounds. Firstly, it said that for the purposes of the in the context and for the purposes of the landlord, the building which is being rented out itself can be a plant. And that's where they understood, the Supreme Court distinguished between the words plant or machinery and plant and machinery. This interpretation of the Supreme Court, as we are aware, has been plugged by a retrospective amendment, and 17(5)(d) now uses the word plant and machinery. So therefore, this argument of the Supreme Court no longer survives as of today. But there was another paragraph in the said decision which also interpreted this phrase on his own account and said that when a landlord, even though he is an owner of the property, if he is constructing the mall with a clear intention of renting it out, the construction is not being carried out by the landlord for himself, it is being carried out for the tenants. And therefore, the construction is not on his own account. Now, this is the observation of the Supreme Court, which has not been amended retrospectively till date. And therefore, landlords, though litigative, landlords may want to consider this facet and examine eligibility for credit in this context of construction not being on own account. That takes me to the last facet of the discussion, and which is, of course, a very controversial discussion which is going around since quite some time. And of course, we nowadays have a few decisions from the courts favoring our thought process, and that is relating to the GST on capital asset sales. And typically, from a tenant's perspective, we are all aware that there can be a tenant without a interest in the property, but in various situations there are statutory interests in the property. For example, if I'm a protected tenant under the Mumbai Rent Act, I cannot be thrown out, and therefore, even though I'm not an owner of the property, I have certain value in the property. I have invested certain monies in the property by buying the property by way of a payment of a tenancy premium, and that tenancy rights are transferable. So when I transfer those tenancy rights to a third person, should I consider it as a sale of an immobile property or and therefore outside the purview of GST? Or is it just agreeing to a forbearance or something like that and therefore liable for GST? Of course, there's a CBC circular which says that this is liable for GST, and one may debate whether that's the correct interpretation or not. And there's not too much of controversy or litigation on that front till now. The larger litigation is coming in a situation where the state industrial development corporations allot plots of lands on long-term lease for setting up industries. And the person who has been allotted the land would then construct a factory on that land, use it for so many years, and at some point of time, business reality might require that he sells this property and moves out. Now, in those situations, the leasehold right which is available to him is assigned to the new buyer. Now, here the department wants to say that these are rendition of services by the exiting lessee to the incoming lessee. Of course, the lot of controversy and it's an incorrect way of looking at it. And the matter went up to the Gujarat High Court, and Gujarat High Court in GCCI's case, the first case, came up with a conclusion to say that this is actually a right in an immobile property, and this does not constitute a service, and therefore GST is not payable. At that point of time, Mumbai High Court had also given a couple of stay verdicts on this. Recently, the Mumbai High Court has also given a detailed order saying that there is no GST on these transactions. Make no mistake, these are all High Court rulings. And because these are High Court rulings and the department is not accepting these rulings and appealing in the Supreme Court, we are still finding that there are show cause notices issued. And if a show cause notice is issued, you may need to reply to that show cause notice, and naturally the matter will be in abeyance or in litigation till the time the Supreme Court finally decides on this matter. In our view, necessarily this is a supply of an immobile property, does not constitute a sale or does not constitute a service, and therefore there should not be any GST on this transaction. But yes, the matter is not totally free from doubt on this front. So this is one more facet which we may need to keep in mind as we keep on looking at the immobile property related issues. So I think these are some of the key points which came up from this simplistic topic, which we thought has some facets to it and bylines to it, which might be relevant from a day-to-day perspective. Depending on what comes up in the budget on Sunday, we may make a quick announcement for some meeting in the next week. But that is from my side. If there are some questions from any of the participants, you can unmute yourself and ask the questions. I'll or you can put it in the chat box. I'll wait for a couple of minutes and then maybe we can, depending on the questions, we can take it up. Yeah, we have a question from Pooja. As an IT company setting up a new data center, we will be leasing immobile property from government on a long-term basis. Want to check whether GST under RCM is applicable on these lease payments. As you are aware that when you are taking a property from a state industrial corporation, there is a very specific exemption entry subject to various conditions. So if those conditions are satisfied, then RCM is not applicable, and you don't need to pay the tax at the initial stage itself. Okay, so I think that was the question which we had. Thank you very much for joining in large numbers, and we can be in touch. And whenever there's a new session required, we will connect with you over the WhatsApp, and you can join later. Thank you very much.